see what are the benefits or uses of cash flow statement. First, it helps to evaluate changes in net assets and its financial structure, both solvency and liquidity. Second, it helps to formulate financial policies. Various financial policies, it is helpful for formulating various financial policies like dividend policy, credit policy, etc. Third, it helps in efficient cash management. Cash flow statement provides information related to surplus or deficit of cash. As the organization can decide about the short-term investment of the surplus, as well as it can arrange short-term credit in case of deficit. Next, it shows the causes of change in cash position. So cash position normally changes from time to time, and the cash flow statement helps us to find out the causes of these changes. Next is, it provides a basis for cash budget. Cash flow is the foundation of cash budget. It forms the basis for preparing monthly or quarterly or even the annual cash budget. Okay. So now we have to see how to prepare the cash flow statement. As we have already discussed, cash flow statement shows inflows and outflows of cash and cash equivalents from various activities and of enterprise during a particular period. That means cash flow statement means inflows and outflows, cash flows, inflows as well as outflow of cash and cash equivalents. So before we are preparing cash flow statement, we have to know the meaning of these terms: cash, cash equivalents, as well as cash flow. And now cash. For the purpose of cash flow statement, cash comprises of cash in hand as well as demand deposit with the banks. And cash equivalent. Cash equivalent are short-term high liquid investments which can be readily converted into cash without much change in their value. That means these are the highly liquid investments which can be readily converted into cash without falling their value. Examples are treasury bills, commercial paper, short-term deposits, marketable securities, etc. Then next is cash flows. Cash flow simply refers the movement of cash and cash equivalents. It may be inflow of cash or outflow of cash. Inflow of cash refers to all transactions that results in increase of cash and cash equivalents. These are the source of cash. Outflow of cash refers to all transactions that result in decrease of cash and cash equivalents. These are the uses or application of funds. So inflow means sources of cash and outflow means uses or applications of cash. Now, classification of cash flows. According to Accounting Standard 3, the changes resulting in cash inflow and cash outflows arise on account of three types of activities: operating activity, investing activity, and financing activity. Now we have to see the cash flows, the various inflow as well as outflows of cash and cash equivalents from operating activity. Now we can see what are the various cash flows from operating activity. First of all, inflows from operating activity. Operating activity is concerned with the day-to-day operation of the business. So any inflow resulting from this operating activity is coming under inflows from operating activity. They are, first of all, cash sales. You know, the main source of revenue for every business is cash sales. So cash sales is the main inflow, reason for the main inflow of cash and cash equivalents from operating activity. Other is cash received from debtors and other receivables. Cash received from debtors and other receivables. Then cash receipts from royalties, fees, commission, etc. Royalties, fees, commission, etc. Then any refund of tax. These are only some examples. There may be some other inflow also, but the main inflow of cash from operating activity includes cash sales, cash received from debtors or receivables, royalties, fees, commission, etc. and refund of tax. Now the outflows of cash from operating activity. Important outflow, important inflow is cash sales. In the same way, important outflow is cash purchases. Then any amount paid to creditors, or other payables, means bills payable. And any payments of our operating expenses, means all operating expenses normally coming under operating activity like salary, wages, etc. And any payment to government taxes, payment of taxes and insurance, etc. These are the main outflows of cash coming under operating activity. Next is cash flows from investing activity. Investing activity means where we are investing. We are normally investing in fixed assets and various investments, securities and so on. And all inflow and outflow related with such a fixed asset and investments are coming under investing activity. Now we can see what are the inflows from such a activity. One is cash receipts from sale of such assets. Cash from the sale of fixed assets or investments. Sale of fixed assets or investments. Then cash receipts of interest or dividend in investment. If we receive any interest or dividend from our investment, that is also inflow of cash from investing activity. And cash collection of loans from borrowers. If we advanced any loan to borrowers, the amount received from repayment of loan by them is also coming under inflow from investing activity. Okay. Now the outflows from investing activity. Major outflow of investing activity includes any cash paid for the purchase of any asset or other investment, securities and so on. And any loan we have advanced or given to borrowers, that is also outflow of cash in investing activity. So financing activity. Financing activities includes all the activities which result in changes in size and composition of owners' funds as well as long-term and short-term borrowings. That means any amount we are collecting for the purpose of investing or for the purpose of operational purpose can be called as cash flows from financing activity. First of all, to start a business, to invest in business, first of all our inflow will be the share capital or capital of the business. This is the important source. So any issue of shares, cash proceeds from any issue of shares is an important inflow. Similarly, cash proceeds from issue of debentures or bonds. Issue of debentures or bonds. Then any short-term or long-term borrowings. Any short-term or long-term borrowings. Here very important point is to be remembered. Both short-term as well as long-term borrowings. Short-term as well as long-term borrowings are coming under financing activity. These are the inflows from financing activity. Now we can see what are the outflows of financing activity. First of all, redemption of shares. Redemption of shares. Whether it preference shares, redemption of preference shares, and redemption of debentures and bonds. Redemption of debentures and bonds. A repayment of short-term or long-term loans, and any payment of dividend or interest. Any payment of dividend or interest. These are the cash outflow from financing activity.